Short one from the Crypto Sniper. Yes, Hexicans and PulseX friends. We seem to have some positive news for you. We covered HEX extensively. We were engaged in HEX quite early in and around the 22-21 period. I sort of caught the last bonus thing before the whole bonusing period was over. So almost, yeah, quite a few people are after me. Actually, didn't think I was that early, but anyway, let's give you a wee catch. This is just for the Hexicans, people that like Richard Hart projects, a technical take. So first of all, just as a reminder of how it all rolls, we've been giving occasional coverage on HEX for quite a period, both to the bullish and to the bearish side, which hasn't always made us popular with the bearish side arguments. But we're really just interested in technical analysis and what it can give us and how our calls can be, and can that help you position for when you should be aggressively in and when you should be backing back out. In short, is it a good time now, or is it a dangerous one? So let's have a look at our original involvement, which was down here at about just under 0.8 of a cent. This was this structure. I'm going to put the lights on. It's going to get a little bit busy. Let's stretch this out a bit, take it out. This is our period of engagement with HEX. This, of course, now, with this particular chart, and I hope I'm using the correct one. I'm kind of confused now. TradingView is doing some slowly some pulse release, but I'm not really getting any great charts with good liquidity. So maybe you guys in the comments below, the real stars and the guys that are on it in terms of that, tell me where I can get the best chart for HEX. And some of the others, Pulse HEX as well, and PLS. Where's the most volume, basically, liquidity and biggest history? I don't want just 3 days, even if it has the greatest volume. We need charts, we need data, and we need history. So tell me where the best ones are for that, please, and that's appreciated. And then I'll try to give you good technical analysis off that. At the moment, I'm using a HEX USD coin on Ethereum. I think it said Uniswap version 3, so I'm hoping that's the latest and greatest. But essentially, we were aggressively long here in the project during this period. And that was a brilliant time. We did only partial close. And in fact, we got further setups along here. I've covered this in previous coverage on HEX. That's our fat Koki draw. I can actually thin it down a little bit. There was another winds up in there, and then there was another one in there. We traded this all the way long in the bull market side, which was very, very profitable. In fact, I made money on HEX. I'm grateful. Thank you to the originator and everybody else and the HEX community. And then we started going up into this period. Now, this is when things got like, it felt like I was being antagonistic without wanting to be, when the bear stuff started to start. But at the end of the day, we're just going to call it as we see it. So this is a weekly time frame. I'm going to reduce that time frame so we just get a bit more detail. We go for the 3 days and compress a little bit. And this was where the head and shoulders start. Now, we covered this in greater detail, so I'm not going to recap it supersized, but this was a turning, and that was at 51 cents. We literally called the top on HEX. Not popular to say that per se. We didn't want, look, I don't want things to go down. We're just saying this looks like a top. That's a technical opinion. That's not a hater speak. So down, 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 lots of grind lines broken on the way down. We covered this. We called for a sub 1 cent. In other words, a 99% plus market cap decimation. So not only the head and shoulder. Now, that wasn't popular at all when you were at 51 cents. And it wasn't considered very likely that you were going to go sub 1 cent. So we had lots of grind line breaks there, grind line breaks. It was quite a shitty bear market with lots of other projects properly stuffing up and putting quite a nasty spell on crypto as a whole. Down, down, down. Many thought that was the bottom. We called a second localized high head and shoulder on there and said, this is just a rally time, guys. Don't get too excited. This could get worse. Again, a bit of a broadening structure like that, which is typically continuation to the downside. You let go there. At that point, you see that blue line. It's at the 5.3 cents. That is already essentially lost close on 9/10 of its 51 cents. Not quite, but close on 90% of what it lost. To come out and say, no, you've got another mega percentage more to go. Where you're essentially going to go another 90% down and 95% down at the base there at the bottom. Wasn't particularly popular. That had downside targets that was made on that wick over there. You expect overperformance to the downside. That's all the bearish ugly stuff that many of you are wincing about. You lived it, you hung on. Most of you are hodlers with HEX. I understand that, so you buy into the project and the man. I tend to trust the charts ahead of everything else. But that brings us to today, where, as I say, hopefully this is better news for you. So as I say, this is our take. So the magic 11 cents, that you're seeing there on HEX is a bit of a neckline for us. So there's two structures that I'm going to highlight for you. So having eventually got our sub 1 cent, where was 1 cent, by the way? 1 cent was around, yeah, this was 1.1. So from here, this was your 1% fail, by the way. So we made that 99% plus target down there, and you did actually go a quarter to almost 2.5 there. So that's 2.85, almost a quarter of 1/10 of a cent, I think it is. So it was pretty ugly viewing. Now the good news. So we've got a neckline, we've got a shoulder. We've got a shoulder here that I've drawn for you in blue. You could see the final fall there with that basing grind line. That literally was the low spill. This one rallied and then made the 1.1 cent again. So there you go. This is an interaction. That was an interaction with the level. That was an interaction. And then you came and you interacted again. Now you'll see there's two that have an orange circle around it. We refer to these as armpits of a potential head and shoulder. Let's draw the other shoulder while we're still in blue mode. Here, here, and there. That's the other shoulder. Now, in the complexity of technical analysis, we get what we refer to as complex head and shoulders. This is a fascinating concept. We cover it in our theory and we trade it as we go forward in the markets live. And in fact, we are giving you a potential opportunity if you're a fan of HEX or HEXagon, or even if you're not, but you're just watching and you think what's going to go up, to potentially trade on some of our theory. And yes, head and shoulders existed long before me, but the complexity of head and shoulders and the development that we've done on it actually sees this as a head and shoulder, even though to many people it isn't. We refer to it as a W bottom head. So that often happens round about the midpoint, both by time and then by measure. And when you get a head that conks in the middle right down to the neckline, and you actually have two halves of the head, they're actually quite powerful setups, because you're getting a combination of a W bottom and a head and shoulders inside what we refer to as the complex head and shoulder structure. It's important to note that they don't have to be exact. For the second half of the head, you didn't dip as deep as you did on the initial. That's also a sense of bottoming. Failing to make a new low is actually a bullish event. So it's good for a W bottom when you get a marginal difference in favor of the later side that doesn't go as low. So there's your W, and there's also the head and shoulder, and there's your key round level. Now, to many people, the key round level would also be the 1 cent itself. That's not a million miles away. But when we are doing targeting, we take the most aggressive, that the first armpit, that's the end of the shoulder. So the shoulder actually ended there. I drew the blue a little bit broad there. The shoulder actually ended there on that, and this is all part of the down leg. And the head ended there, and this is all part of the shoulder as I've drawn. So there's that. And there's another technical element in a moment that I'm going to cover with you that is also further positive on a lower time frame, which will suggest that there's a potential triggering event coming that could see good news as well, additional and not too far off, and potentially squeeze your risk on your trade so that you can get in a little bit more. Now, leverage trading, HEX, I don't know. I think you probably can. Again, educate me. I don't know as much as you guys, most of you guys that are deep in the weeds here. Can you even leverage trade HEX? Should you be leveraging? According to Richard, not. But I'm sure he won't mind if it's on the long side. But there is a possibility that you can squeeze that risk. Now, you don't have to be leveraged by squeezing risk. You can have an investment and you can have stop losses on investment. So you can scale your investment and have a very tight stop and have a very interesting risk-reward ratio, which we'll be covering with you in a second. So let's just finish with our head and shoulders and W bottom before we get too deep into the weeds. What is the projection of the target? I started talking about the 1 cent being a key level, and I want to draw it in on there because 1 cent is going to be a key level, but we chose the 1.1 for a reason, because technically it is the highest and strongest level that both the armpits and the W bottom did run. So you're getting a little bit extra juice, but I'll just show you where the 1 cent is relative to that. For my OCD, we'll take those decimal digits away and it'll shift slightly down. So you can see the 1 cent is actually a key level for many people. Everyone knows you're going 1 0 less. And you're going from 4 zeros to 3, or from 2 zeros to 1. This is kind of significant. It feels significant. It's kind of $99 oil versus $100 oil. It happens in every market, and it becomes a key element. But you can often expect a wave of selling there, which is why, going back to the original discussion, you were a little bit sanguine about going below 1 cent for a while. You dipped and you tried to reclaim it, but then the selling came. Anyone who could still get 1 cent got out, down, 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 down. When it wanted to get away here, the minute you cross the 1 cent, the 1 cent's the lower blue line, you do cross it, key levels of significance just run. So you put your head just above the parapet and then you take the bullet in the forehead, because they're still out there. The sellers are still out there. That's what happened. Down you go. Then you come up again, and now the fire, they're running out of ammo. 1 or 2 of you get hit, a couple get winged, but there's not so much pushback. And that's what's the smaller right shoulder instead of the big half of the W head that goes on. Anyway, target projections that come out of this pattern, according to HVF method, Hunt Volatility Funnel method, that if you want to learn about the technical aspects, you don't have to leverage trade. I understand that. We're conservative. Most of the time we're investments. Occasionally when you get the big bull markets, adding conservative 50%, maybe 100% with very tight risk and stops. If you can do all of that, you can boost returns. Going 100x on BitMEX, different story. And especially if you do it every time, one of the days you're going to spin the wheel, you're going to get it wrong, and it's all going to be taken away. And on that point, Richard is absolutely correct. So what kind of guy are you? Do you have self-control? Do you understand the values of method? That's going to be up and down to you. But the right shoulder a lot lower. Where does the target take you? So currently, let's just get a price currently of where we're at. That's your bid and ask according to this, 0.009. 196. So you borderline the 1 cent, but your knockbacks from the 1 cent, the lower blue line, are getting less big, and you're getting bid back up. You got back up there again. See all the wicks getting trimmed there and a little bit of knockback. Now you might be able to buy in a tiny bit lower. It can come off a little more. I'll be dropping into this area on a lower time frame in a minute when we're ready to leave. But the projection, if you're talking 0.009, is actually 0.044. So let's just leave it 0.044. So you're 009. So you're not even 1 yet. And that's what I'm showing you is actually a 4.4 times. So you're probably on about 4.5 times, a 4.5x, which will move quite quickly and impulsively when it does it, but not necessarily in straight lines. You will have corrective pullbacks. There are clusters of levels that were respected on the way down. That will be a little bit of a headache on the way back up. So they were there, for example. There's a couple of others in there. You rallied up here and you got rejected there when you tried the rally. That's just before target. You'll probably smash them both with momentum. You may even touch that key level over there. There was a neckline of that big head and shoulder. That's the right shoulder, by the way. That's the head of the thing that took you down. That's the wrong kind of head and shoulder. This, of course, is an inverted head and shoulder, which is the right kind of head of shoulder for the bulls. Okay, so that's an inverted. So let's finish on here. So targets in and around 0.44, and I think you could probably get in at about 88. You're at 88 at the moment. You could probably get in. You might get down here, you might even get a 7.9 entry, which takes me back to my original entries right there when I was collecting the first bonus, round trip to 51 cents. By the way, I didn't sell 51 cents. I did get out a tiny bit sooner on a larger amount. And then after the 51 cents, when I saw the head and shoulders in and around the upper 30s, 38, 39 cents I got. So I didn't even get the 40s, but I said, no, this is definitely triggered and running. So it was very good for me. And I was glad, but I did warn guys that it could take a lot of your wealth away, but now you're in a better cycle and a better phase. So let's drop that time frame. Let's drop it to the 4 hour and just give you what we're seeing so that you can talk a little bit more. So now we're going into the right shoulder of, let me just take that away. We're going technically into the right shoulder of inverted head and shoulder, which is your friend. The word inverted helps make him friendly. And these are your cluster of levels. There's your there's your 1 cent, and there's your 1.1, which is the level just run. Now, this looks like, and I'm going to just adjust this a little bit because I think you're going to come a little lower, but I think you're going to get bored up and base out around here. So if you are looking for a trade idea or stroke invest idea, let me rather say invest idea, where you want to manage risk, I don't think it's going to be that easy to run below this level again. So I'm calling, a localized low here. There's quite a lot of bid action here. And I'm going to be running that all the way up for you to the 44, the 0.4044, which is 4.4 cents. Where you are actually below a cent, and I'm going to suggest to you that you could even get 0.085, which just means more HEX to go to the upside. We can do the math to work out the multiple for you. Let's do it. Let's do it. Tiny little calculator. Bring him up, bring him up, bring him up. So let's say you get 0.0085. And it is currently 80. So I think you can get in here. You might even get a little bit lower. I think you can get 845. 845. Let's just leave it there. Let's not get too greedy. Let's go 0.085. Let's leave it at that. 0.085. So I'm going to store that in memory. And then I'm going to say to you, your target is 0.044. And by the way, I wouldn't shut completely. So the good news is it's not just the 4.5 times, the 5 times. It is actually a point where it's likely to rest for a while, and you may get that spell of chopping around, progress decay, and a little bit of churn. But this is a secular reversal in the same way as the 51 cent had its target run, but ended up trading well below 1 cent. Actually was a quarter of 1 cent at its absolute bottom from 51. So the target was not only fulfilled, but you had a cyclical bear market. So that is the benefit of big reversal patterns. Not only do your targets get made, but you're now in a cyclical bull market where you can expect further upside to the upside and possibility of downside. So you could do a partial close there. Take some of the money off, just be calmer because it's going to chop around. It might be more volatile. You're going to have pullbacks potentially. You might churn for a while. Other things might be moving during that period. You might want to play in there, etc. Maybe pulse, maybe one of the others. So you recognize that not everything's going to run together. In fact, we've just had a dip wick that you could have bought. So now that is an official wick where you would have got your entry there. And I think you may still get another chance. I'm not saying it's over on the downside. So let's take it back up to the weekly, or was it 2-day? Let's go back up to the 2-day and the weekly. By the way, that risk would go just under that long wick there. So so how do head and shoulders work? Your stop loss or risk, the point at where you accept you're wrong, comes down to the right shoulder. So that's much better than just the W, because when you trade the W, where you just have a W bottom, and this is the value of our complex head and shoulders theory, is when you're getting the little shoulders with the W, and we allow them to be disproportionately more small than a normal head and shoulders, which has a mountain top, like the Alps, like Kilimanjaro, etc. The benefit of that is you get to put your risk a lot higher. So you can see what this has done for our risk reward ratio. You're sitting on about 20.75. Remember, we're not calling a top at target. We're just saying slow down, chop, churn, pullback, and more. So this, if successful on balance of probabilities, usual story, you will get further upside with a greater multiple. Now, I'm not going to tell you it's going back to 51 cents or beyond 51 cents or to whatever. I don't have targeting structures for that. I'm not one of these guys like Max Kaiser that will shout out 400,000 for Bitcoin. If I don't get a technical pattern for it, I'm not having a pissing contest for throwing out the biggest number. But this is a cyclical reversal by a technician who has largely got this token right. I get loads wrong, by the way. That's not a braggart statement. But in terms of HEX, it's made good charts for me. I got in on an upside HVF. I traded 3 or 4 of them to the upside all the way up. And when I got my first significant time frame head and shoulder reversal, I was out partially a little bit before, and thereafter, when it was clear it was triggering to the downside, I was gone. And I did great, and I am grateful to all those involved in the project. So this is good news, and it's secular. That means cycle-wise beyond in a good way. So overperformance can be expected, and we would once again look for continuation patterns to the upside. You would continue to play with your other 75% that you didn't lock in profits when you made 4-4, assuming that happens. Remember, it's an on balance of probability scenario. We are in a Bitcoin bull market, and we are in a crypto market that is likely to go up. Alts, which will even have a bit of catch-up. Bitcoin dominance has got super high recently, and that is typical. Bitcoin leads in bull markets. I've done enough of them by now. I know how this game works. The alts are going to start asserting as well, and you're going to see a little bit of reining back on that Bitcoin dominance, and that's also good news for HEX. I know people will go, but our project's the best, and get all pride and nationalistic. You need the environment for things to succeed with you. No matter how deeply embedded you are in your own tribe, you need the environment too. So overall, this little structure could dip out over here and then give you what we like to refer to as a potential upside squeeze. It's quite common to get upside HVFs on the way up. In fact, we will be doing another crypto video around other tokens more generally later in the day that you'll be able to watch. That will talk about a number of other projects. I'm just doing the HEX one separately so it doesn't agitate people. The others, if you don't want to watch general other tokens, you don't have to. And if the other guys don't want to watch HEX, they don't have to. But I think you could come on down, base out, have another little play with the key 1 level, and that the 1 level break actually will be a triggering event for a major move to the upside. That will be impulsive. That could see you make great money. Okay, that's the video. If you enjoyed that, give us a like and a share. We appreciate it. It helps us do more videos, especially if in the space, if we get a whole bunch of support. It's bullish, it's good news, and it's not telling you what you want to hear, because I'm the guy who told you exactly what you didn't want to hear for quite a long time when it wasn't going well. So hopefully that gives us some authenticity in terms of a marketing take. This token plays very well technically, which often means it's quite a valid chart and there's less sudden spikes and less manipulated as well. So that's quite a feather in the cap, so to speak. Okay, good stuff, guys. Thanks for watching, and we'll catch you again later. Bye for now.